Good evening. Today is November 11th, Wednesday, Veterans Day 2015, and going to do a trade review for today. In the pre-market this morning, I talked about we gapped up, and I made some comments about at the end of the video of the scenarios that we might have, and here they are right now. So there's lots of places that might, and here's the 75.75 that I talked about, which would be the trend line, a test of that trend line on a pullback. So I think the odds are very high for a either closing the gap with without getting value to unchanged and finding rotation in here. I think the odds are high that we won't gap and go. We will retest yesterday to some degree. Because we are still under the previous month's high, so that's a bit bearish. So we did end up gapping open at 81.75 and immediately sold off. It was an open and drive open, and came down very quickly to the previous high day and bounced a little bit. I did not want to take a long, even though I was bullish. I felt there was a little room down here to kind of test some areas. Number one, number two. What really stopped me was this, the open and drive. I remember at the time, it was sort of more of a, for me, it was very early. I don't like trading immediately at the open. It can be very dangerous. So that was part of it, but yeah, that just didn't look right to me. And had I gone long there and not gotten out immediately when it wasn't going my way, it would have been run over, obviously. So that was one trade that would not have worked this morning. So let's move on to the next situation. Actually, one of the trades of the day would have been for someone to recognize that this was a 2-day balance here. And that once the overnight had taken the market up, and it could not remain out of balance. It fell back into the 2-day balance area. So once it fell back in, down here was the target, somewhere down here. Let's see here. Move this up a little bit. Okay, yeah, there's the low of the day. So. Oops, let me adjust this. I have the letters kind of small right now. I'll make them bigger in a minute. But so we were looking at possibly coming all the way down here, maybe testing Tuesday's low. That was the trade, and this would have been the trade of the day. It would have been very low risk. Someone could have had their stop right above the previous high day. However, it did come back out, and I didn't count how many times it came back out. It did bounce, I think, off unchanged and value area high here, which was to be expected. It did come back out. I don't remember how many times or how far up it came during that little chop there. But, if someone was waited and patient, or they wanted to wait to get a little more confirmation, maybe get into this balance area of the overnight, that would have been an excellent trade. And they could have had their stop low risk here, then begun to move it down to above unchanged or the value area high later on in the B high, or we had a double distribution. Or initially, if somebody wanted to take the risk, they could have had their stop up here above the open, or at the open. So there were. This was really the. Let's just call it right here as far as where the good entry would be. So if someone was to get back into the. Well, sorry, that's the value. All right, I made a mistake. That's today's value area high, not yesterday's, because we have switched into the new session, and it's showing. What I'm going to do then is get rid of the overnight, and that'll help. Help me to talk about this a little bit more, is how it played out during the day. I didn't realize this value area level obviously is for today, but we started a new session down here, and automatically it's going to populate this in my software right here. I really want the value area high to be right here. So let me fix that right now, even though you have to keep this in mind because I won't have this up anymore. So let me fix that real quick. Okay, there we go. So what I was trying to say then, again, is once we came back into, all right, I'm trying to see, you know what, I don't remember where the pivot points and things were today, so I'm not sure if these switched or not right now. That's a bummer. I can't remember where they were. All right, it doesn't matter. Those are just references I just like to be aware of anyway. Okay, so someone came back into yesterday's range. Once we got below unchanged, this would have been a good place to short. We did have some, we did have a balance area in the overnight that had a little divot right here of non-acceptance. Once we got in here, and even you can see in this area right here, this would have been a good place to short with a stop up here, or even way back up here. Could have taken it down for, let's say, 77.50 down to 69.70. No, actually it stopped. This is probably where you'd want to get out at 71, right when it was repaired, this prominent POC, which became obvious this was the destination they were trying to get to once C opened up. When C opened up, we had a double distribution, and let me make this bigger now. Okay, Control C. All right, hopefully that's big enough. Okay, this was, so let me see where halfback was at the time. That's going to be important. Well, I'm going to skip it. Let's forget about halfback. That's one thing I don't like. I should have done this video before 6 p.m., but I had other things to do and was tired. So where halfback was exactly at the time, it was in this area. I think it was actually at like 75.50 or 70. If we think about it from here to here. I think it was right in here. So yeah, that would have been some resistance. So, but nevertheless, you had 75 quarter was the maybe it was right here. Okay, 75 quarter was the prior week's low, and you could have when C opened here and traded up here. Once it started to come back down, could have gotten short, anticipating. Now, of course, you had XS and B at the time, anticipating that they're going to repair this prominent point of control, which is exactly what happened. I didn't like it. I felt the shorts were really driving it down, but I did have a neutral to bullish sort of bias, and I just, it was early in the day. I wasn't liking this because now we're back into range, back into value. Nevertheless, another thing that happened at this time, once we opened in C, the 80% rule is in effect. So not only are you shorting against the previous week's low, this would have been a great short at the value area high. And, you had the odds were 80% that, somewhere in there, that we would close the value area low and fulfill it to the other side. Now, we did trade back out of it, but you notice the way the day ended, we actually did fulfill that later on. Market has a memory. At any rate, so this was a great trade up here. This would have been a great short as well, or add-on place. Then the next trade, this would be the trade of the day as well, was when C repaired this point of control. I have a, I pull it in here. I have a 5-minute chart here, and where I identified where there'd been a lot of acceptance, and when it first came down this morning. Okay, let me back up here. Okay, that's tonight. It's a new session. All right, it was right here. Now the point of control at the time was, well, it still is 70.75, which is right there. So we came down to that point of control and found support. Now this represents, each one of these is 5 minutes, so 5, 10, 15. In the 20th minute of that TPO, we actually looked inside of this balance area, okay? Which, if we don't penetrate it, it's support. If we get rejected out of it, then it's again support. And even had a candlestick here. If I was looking at that, this would have been a great long. From after looking down here at 69.75. Now, also recall that 69.75, I've changed my daily chart a little bit. I had this level on here as the balance low of this area. I'm sorry, right here, 69.75. I've identified this area previously of this range, this new trading range I thought we were forming based on the bottom of this trading range. In my pre-market, I'll explain a little bit more of the shading here. It just may look confusing at first, but when you understand what I'm doing here, it makes sense to me, and that's all that matters. This was the trading range low. Okay, so notice that when we did come down, we looked below it by one tick, right here, and came back out of it. So that was, again, I talk about balance, balance rules and things. We looked below it and came back out of it. So again, if someone didn't get long here, could have gotten long here, and this was the trade of the day, honestly, the trade of the day. Now this was one of the trades of the day, but this was the best one because now the market had shaken out. We had, it's a little bit less risk. We had value, which was for a long time higher, and then finally, it ended up still overlapping to higher, and that was in the scenarios that I said that I felt the highest odds were that we would enter yesterday's range and rotate with a later rally, but rotate in here, and that's exactly what happened. So this was the later morning rally. Came up, you could have, let's say you got long at 71, okay? You would have spent a little time on the point control down at the end of the period, the last 5 minutes, and then the D period. Let me pull something else in. Oh, okay. I thought I stopped the video for a second. Maybe I didn't. In D period here, we had, we opened up at 72.50. So we actually came up a lot. We took back more than half of C period before D period opened. So opened at 72.50 and traded off, and then we had attenuation. We had 391 contracts here. So there was an opportunity to recognize that we were leaving excess with also a tick outside of balance, because this was the bottom of the balance area at 69.75. Couldn't even get back down here to test this level. So there you go. Onwards and upwards it went for the next hour to 2 hours. Next 2 hours. Well, yeah, 2 hours. And even took out the high. Let me move this now out of the way. Clear this off. Okay. I try to make this video short, but I don't know how many people watch it, so it doesn't matter to me. I'm doing it because this helps me become a better trader when I go back through the day and look at trades that I've taken or opportunities that were there. Especially it was helpful to me when I do the pre-markets, the preparation, all the work, and then it my market understanding was confirmed, and the more I do that, the more reinforcement I get in some of the thought patterns and things like this. I mean, it's all about perfecting your craft, So another thing I wanted to point out. Okay, now when we did take out the, just a moment. Let's see, 82.50. When G came up here. Now, there were opportunities to get long up in here. I didn't like this one here. This was an opportunity to get long when we had D as an inside bar. Just a moment. Let me get rid of this now. Oh, wait. No, I want to keep that here because there's something I want to show you about that too, or talk about. So D was an inside bar. And when E opened up, it opened up right on the high tick here. I didn't like that. I would rather have it retraced a little bit first, or thankfully it didn't look up and then come down. I don't know that I would like that, because I felt this was a weak low and it could have easily made another run down here. We've seen that many times with inside bars where it's a look above, then they come back down. That didn't happen. I didn't know that this would hold even when E popped here. I did feel that it was possible that we would get a little rally, But here was one of the other things I didn't like about this trade. Now, it turns out this was a good entry to add on or to get long if you hadn't been long yet. The problem I didn't like is that we had the overnight low here. We had, I think half back was right in here. Right, it was like right in here. I think actually it was like one tick up. It was at 75.50, and it's moved down since because the range has. I think it's a little longer on this side than it was at the time. So anyway, we had the value area high, had the overnight low, had half back, had the prior week's low, had the trading range low. I'm sorry, I said trading range low. I meant to say trend line low. The 75.75 from the video was a trend line. Let me pull that in here on the daily. Okay. I've erased this trend line, I think. Yeah, I did. I erased this trend line. Let me put it back on here. Okay, so if we came down like right here, I think I did it like this. Okay, so 75.75 was about where 75.50. You can see that. You can barely read it, but you can see it. 75.50 it says. Another person who has a different software platform is able to actually tell me where that intersects. Okay, I got somebody calling me. I've got to stop the video for a moment. Okay, I kind of lost my train of thought there. I had a Skype call. So let's see. Where were we? Okay, I was talking about this trend line. Yeah, and another trader has a platform that if you hover over the trend line, it'll tell you exactly what price in a little window. Mine doesn't do that quite as well. So anyway, 70. Yeah, I know what we're talking about. We're talking about the fact that you could have gotten long because not only did we break out of an inside bar, but we stopped one-time framing here because we were one-time framing down. Then we created excess and we had an inside bar and we broke out of it, and right here we stopped one-time framing. But again, we were trading right into the overnight low, so that's one strike. It's one place sellers could come in. The value area high, another place sellers could come in. Prior week's low, another place sellers could come in. Half back, another place sellers could come in. And then you've got the trend line low. So there were 5 reasons getting long here was a little bit sketchy. And I was talking about this trade with some traders, and I thought, this would be a good place to get long or add on, but I didn't like the fact that we probably would spend some time down here, and I don't recall exactly how much time we spent in this little area. It was like 4 to 6 ticks, but it spent a lot of time. And I think one thing as a trader that I want to do is not risk emotional capital. Emotional capital would have kept me out of taking another trade. Had I finally this broke, I'd be happy, but then I'd be kind of worn out because it's another hour or so before it got up to these other levels where you might have taken profits, gotten out or whatever up here. But I think by the time you got up here, you're thinking, hey, we're definitely going to go for the stops up in here, which is what happened. And at this point, it'd be like, I'm going to go take a break. I'm going to go to lunch or something. Well, look what happened. We had a reversal pattern here, and there were 2 shorts here, 2 short opportunities. One was we looked above the initial balance high and came back in. So we came back in. There was a short opportunity here. Now the problem with this trade, let me just put it here. Put it right here. This is where you could have got in here, coming back through the open, having looked above the initial balance high and come back into balance. There's a problem with this though. We were one-time framing up, and we had 1 distribution, 2 distributions. So this is very bullish, and especially considering there's possibility for the market has been getting too short. We got some short covering. This would have been very risky. Nevertheless, you wouldn't have had to risk a lot. You could have just put a stop above the high or a stop above the open or above the initial balance high. Once you came back in here, you could have even risked 2-3 ticks, and this would have been the reward. all the way down here to, let's make even math here, 81 quarter to 70 quarter. So 11 points, 11 handles. That's pretty good. And another problem, well, not a problem. One thing that actually supported this trade was the fact that if I scroll up here, at the time, okay, yeah, these pivot points have switched. That's the way I have it set up. Okay, at the time, this right here, 83 quarter, I believe, was the R1. This was the R1, so there was resistance right above. So sellers came in here. Well, they came in here. These are laggards up here. And we also were 8 wide here. So, this was likely to get a bounce. And once we came back in here, this was worth a shot. Could have had your stop up in here even. But what was an even better opportunity was after G closed and opened in the lower quadrant of G, we had a reversal pattern right here. So now we're one time framing up. Here's a short here. Actually, might have wanted to even come back into the prior day's range. This was you had to take this trade. So if you, okay, let me pull this back up again. All right. So right here, it's 78, 75. Now you've stopped one time framing. You've actually come into the previous high day. Heck, you could have even waited till you got back into where it's 1, 2, 3 wide here. So now you're 4 wide. You're at unchanged. Actually, why don't we go here? Why don't we go to where it's 1, 2, 3, 4, 5, 6, 7. So we got 7 wide right here. 8, 9, 10, 11. Put your stop to get short right here at 77.50. So let me actually get rid of this part here. 77.50, and your odds increase there that it's going to work. But again, this could have been an entry even right here, where it stopped one time framing, or somebody could have front run it a little bit, noticing that in H period. Let me pull this in here. Look at this. We've got 45 at 80 quarter. Now we opened at 80, I think ticked up. So 848, ticked up 45, built some volume at 79, 75. There was 700 here. I think it stayed here for a few minutes. Okay, but we opened, ticked up, came down, built some volume here. Then once it, someone could have anticipated it and broke, and maybe had your stop above half back and had a stop up here. Well, the best place would have been at the high or at 82 quarter. And I say that because if it would have come back up here, it would have formed a poor high here, So then the trade is likely broken. But it could have ticked all the way up and they sold it at half back. But then again, the reversal pattern would have been broken if it went to 81 quarter, 81.50. So these are good places for a stop as well. And that would have been an excellent trade. You could have taken, again, from 80, if you were anticipating it, all the way down to, let's just say 71. So that's 9 handles. It's a great trade. Okay, moving on. Let's see what we got left here. Now, of course, it did bounce here for a while, and it did push back. So, a great place to take some off would have been right at this. Could have taken some off right here at 75 quarter. Again, this was going to be a support area. I think it's interesting that it did get through there, but it wasn't unpredictable to say that it wouldn't rotate around this area, and that's exactly what happened before finally breaking lower, which was something that could have been anticipated because we did develop a poor low here. Now, I do know some people got long in here, and this would have been a good trade as well. And one of the things I want to show why and what I was looking at that time was something that, again, it's a Veterans Day, it's the middle of the week, It's early afternoon. The volume was lower. I think today was 3.6 billion. It was a little lower than yesterday, and yesterday's wasn't impressive either. Let me pull in this 5-minute chart. And one thing that someone could have done. This my Fibonacci is still on here, I think, from this. Let's see, 130. Yeah, so there was opportunity to when the market came down to 73. So right here in I and J, okay? So I period really. When it came down in I period, this was almost the 76.4, 78.6% pullback. Let's just say a little bit of over or throw over from the 61.8. So this could have been a nice long for, let's say you got in at 74. Let's just say that, okay? 74, and well, no, let's make it at 61.8 anyway. 74 and a half. You could have taken it up to 76, 75. So let's say 2.5 points, because at the time, I think the POC was up here at this point, because we were 1, 2, 3, 4, 5, 6 wide in I period, and that's where the POC was. In fact, let me think for a second, because it did move down here in H. It looks like 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. All right, it moved down, but I think it was. At any rate, nevertheless, there was reasons to get out in I period after about 2 points up here. Yeah, it's difficult to see exactly, and sometimes I'm not sure how reliable this is at times. But you can see where the POC was at one point, and that's why I'm remembering it being up there, because I remember talking to a trader who did get long here, monitor for continuation. You know, watch to make sure it goes through, because it didn't. It went up, but it was stalling out, and that wasn't what we wanted to see. Okay, so I just want to throw the Fibonacci element in there, which I tend to favor on days like today for rotational, and I'll show you another reason why. So if I throw Fibonacci on here, so this is the early morning. It was G period high. Okay, wait a minute, that's not correct. Where's the open? All right, so oh wait, that's not going to work. Okay, because the G took out the high. There was a reason. I was looking at. I must be thinking of another situation here for the moment. Yeah, I am. Maybe this is the only one I was thinking of. I thought there was another one Fibonacci wise, but I didn't stay for the entire day. Let me see if there was one over here. I mean, there always is something happening Fibonacci wise if you kind of know what's going on. For example, like right here, maybe this was what I was thinking of. Once we took this, I think this was maybe another reason I thought it would be a good place to get out of that trade long and I. So you can see how it came up to 61.8 and also right below this balance area. So, someone who got long down here, once it came up to 50% retracement, it's like, okay, take some off, take some profits there, because you might get a bounce. Sure enough, they made another drive down, which was to be expected, because they were liquidating or selling it off. And then then it rallied again and actually went to 61.8, but couldn't find acceptance in this balance area. That's another story. That's my own thing. Everybody's got their levels, right? So let's see here, and I'll show you another one I'm spotting right now. I don't know about a trade here, but I just like finding Fibonacci things. It's fun to kind of see this in the market. So right there, it found support again, and L period rallied up to the 50% level at 2074. You can see right here. Or no, maybe that was M period. Let's see. Yeah, that was M period. It was 5 minutes after M period. It came up all the way to 50%. All right, so moving on. Okay, so we talked about this short. We talked about a possible, taking profits either here, or you could have taken it at this 73.50 level. These I labeled them since, but I had these levels on there in the pre-market. I'm trying to think if there's one on here that I may not have had. I'm pretty sure I had all these levels on here. The 69.75 I didn't have labeled. That was the balance low. I don't think I had any of these labeled at the time in the pre-market. I did the video. I just put the lines on. All right. This video is going longer than I intended. So that's okay. It goes as long as it needs. It goes as long as I need it to, right? So let's get that straight. This video's it's for me and my edification, and any runoff edification to anyone who is kind enough to watch it. Well, that's great. M period. Well, it looked above this L period and failed back down. I don't know. I don't like this as a trade. Not this time of day. Of course, there might have been other reasons to short it, but I'm going to say that was it for the day. And I didn't count these, but it looks like there was one, 2, 3, 4, at least 4, possibly 5 great opportunities. I don't really like this long here, but it's definitely worth taking, especially when you considering it's rotational. This is a 76.4 retracement. You just had this huge sell-off. You got people that are who got short, people who were long and were liquidating, and you've got people now who are laggards, and you've got people taking profits when it gets down to one of these known levels, and they're covering their shorts, and it's going to rally a little bit, and that's exactly what happened. And then it looks like they tried to push it up again. I think I had some computer trouble in here somewhere. Oh no, that was earlier. Never mind. I think also there was probably a short to be had that was identifiable in K period. Actually, this might have been. I think I just talked about this Fibonacci wise. This might have been K period. So from that was G period down to. Okay, let me get rid of this. This must have been K period. And right to the 50%, because that's the highest it got back up. So this is a 76.4, rally to the 50% of this move. And that could have been an opportunity short against unchanged, or when it came back into this balance area right here. So we're balancing right in here, right? So it balanced, fell back into balance. You had a shot at the other side. It actually, came even further down, because at this point too, you had a weak / poor low here in IJ right against the initial balance low. Okay, so don't like to trade in this period, and don't really know what to say about M period. That's not necessarily a place I would want to go short on a day like today. And value all the way to the end remained overlapping to higher. So any shorts were going against value all day, and that was something to be mindful of. So it wasn't an easy day to trade. Obviously, looking at it, going through it like this, it's easier to see and say, oh yeah, no, I see it. But the fact is, these are all these are 30-minute bars. These are all identifiable trades in the heat of the battle. But how these bars develop, for example, H was so quick. That was a nice liquidation break. That was easily anticipated. You had a reversal pattern. You had the way it fell back into balance. You had the stopping of one-time framing. You had it back into range, and basically this 2-day balance area here. This was spot on. Some of this stuff in here, that's a little bit trickier to kind of capture. Even the short was a little tricky to capture, because that was one that, for example, I've got my couple-day balance areas, but I had not really marked this off as a 2-day balance. I saw this as a move of change. Now, I'm looking at possibly these 2 days. I don't want to necessarily call it a new balance area, but if we had an inside bar, I might have had another overlapping balance area here. I know it's getting a little complicated, but I know what it means, and I know how to play it. I know what these levels mean and how to trade it. So that's what matters to me, because I'm not paying anybody, and nobody's paying me. This trading's for me. So at any rate, I'm going to call this video over, and that's the trade review for Wednesday, November 11, 2015. We got holidays coming up pretty soon, then Christmas. So got to make hay while the sun shines, I guess. And I'm trying to get more into doing the trading reviews because it's extremely helpful to me. I encourage you to do your own if you're watching these and you're getting something out of it. Whatever trading method you use, go back through your trades or go back through the day and say, okay, what did I do? Why did I do it? What other opportunities were there that I missed? Because then you are actually sort of feedbacking on yourself to, and in the future going forward, it's a rehearsal. It's absolutely a rehearsal for the next time that that situation occurs. It will always be unique, but there are many patterns, and there are many patterns of things that happen in different contexts that are very tradable. And anyway, have a good evening, good day tomorrow, or good day today whenever you're watching this. All right, good night.